Ladies and gentlemen, my name is Greg McCloskey from ForexLive.com. I'm going to take a Forex quick look at some of the what they call commodity currencies, the Canadian dollar, the Australian dollar, and the New Zealand dollar. We'll take a look at them. Starting with the dollar versus Canada. So I have the hourly chart up here for that currency pair. And if I were to put a box around this whole area right through here, the market tried to or traded within this area for a long period of time, going back to September 23rd, 22nd, somewhere around that time. We did have movements above that area right here and then right here, but they're relatively short-lived, and the price then started to rotate back to the downside when the market failed at these levels. So we did try the upside. The buyers had their chance; they couldn't do it. And in trading this week, what we saw was the market move below the lower end of this range through here, where we have all these different swing lows, and indeed on Friday's trade and yesterday's trade and even today's trade, we saw some failures below the lower end of that swing area, where the market moved below and then moved back up, moved below, moved back up. Did it right here as well. So the market was taking its time, if you will, unsure of which way the directional bias would be through this area right through here. And so it wasn't until today when the market found some dollar selling, and we saw increased movement to the downside. That movement to the downside fell short of the 50% target of the move up from the low price going back to this day, all the way back to August 11th or thereabouts. That came in at 133.52. Our low price for the day reached a low of 133.86, it looks like, before the market started to bounce back to the upside. We are seeing a rotation back to the upside. And what traders will be watching now very closely is, once we made the break, we don't want to go back above that old area. We don't want to go back above this box and go into this box. We want to see the sellers start to line up against this area and stay below it. So it's okay to have a little corrective move, but we want to see a rotation to the downside. We want to see this type of move where we find what was old support becomes resistance now that it's made the break. So the goal here is to stay below the 135 level. If the price is able to stay below that level on a rally to the upside, then we'll give the sellers, we'll keep the sellers in control. If we move back above that level, all bets are off, and the buyers are back in charge in the short term, at least for the dollar versus Canada. Now let's take a look at the Aussie versus a US dollar, and this is again off the 4-hour chart. And what we notice here is a couple things. One is the retracement level, the 38.2% retracement of the move down from this swing high to this swing low. This was a trend-like move to the downside, a corrective move back up, move back down, and move back up to the 38.2% retracement that comes in at 0.6538. Also near that level is a bunch of swing highs that came through here. When we broke through that level, look at all these swing highs up through here. And then in trading, this is a 4-hour chart, so a couple weeks ago we came up toward that 38.2, toward the swing area, but could not muster the momentum. We started to rotate back to the downside. Now we break above this old high from a few weeks ago, and we look up toward the 38.2, toward the swing area, and you can see that the price did in fact move a little bit above the top side of that swing area near the 65.46 level. The high price for the day reached 0.65508, so about 4 pips above that level, and then rotated back to the downside. We are currently trading below the prior low from this, or prior high from this day right here. This is the FOMC day last week, and the market moved lower off there. So we are below that level at the 0.6492. We need to get back above that level in order to give the buyers more hope. That level was the high here, was also the high in trading yesterday, where the market found sellers against that level. So we need to get back above the level. The buyers are taking control. Other than that, this is just a corrective move into a bear market here for the Aussie versus US dollar. We need to get above the 38.2% retracement and stay above that level in order to keep the idea that the bottom is in place for this currency pair, and we have further upside potential for it. Otherwise, sellers are still in control, so be aware of that. Okay, let's take a look at the New Zealand versus US dollar next. And like the Aussie versus US dollar, we moved up to a retracement level. Instead of the 38.2% retracement, this retracement level was at the 50% retracement of the last move to the downside from this high right here to this low right here, this trend move to the downside. Bigger move to the upside here, goes to the 50% retracement, also near, very similar to the Aussie versus US dollar, but again, near a swing area through here where the market had a lows and then highs through here before rotating to the downside, making our new lows. So we return back to that swing area here, back to the 50% retracement, and also add to it the channel trend line. The channel trend line is created off of these lows right here. So we have a nice little trend line, which, by the way, bottomed against the 100 bar moving average and the 200 bar moving average and the trend line right here in trading last week before moving to the upside. And on the top side, if we were to connect, do a parallel line of here, and, connects to these levels, and indeed the price high today moved up to that level just near the 50% retracement rate, near this swing area. So key level right here, and the market found sellers against that level, currently trading down at the 0.5953. So held resistance, sellers leaned against that level and started to push the price back to the downside for this currency pair, equivalent to what we saw in the Aussie versus US dollar. This employment high price is going to be a level that we need to get to and through back on the downside. It was high price on the employment, not on the, this is on the FOMC day. And then in trading yesterday, we moved up to that level and rotated to the downside before rotating back to the upside. So watching the 59.44 level on the downside, if we move below that level, that could lead to some disappointment with a potential move down toward the 38.2% retracement. If we hold that level, then the buyers are still trying to push against 50% retracement, against all its resistance level on the top side before it gets to the 100-day moving average. So there you have it, a look at some of the major commodity currencies and the price action today. We saw each of them run into, or we saw the Aussie and the New Zealand run into some key resistance level on the top side and back off. We saw the dollar versus Canada move below a key support level, and it's got to stay below that level to keep the sellers more in control in that currency pair. So that's the summary for you from a technical perspective. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.